What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to break down why tomorrow is going to be an absolutely massive day as we have CPI coming out. So I'm going to break down some very specific details about CPI, break down how it may end up affecting Tesla in the markets, and what numbers you should be watching for tomorrow as it's a very, very huge day. Now, before I break anything down about this, though, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Webull link down below in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed up to 12 free stocks, each worth up to $3,000. And the best part is, any could be a free Tesla share. It's a limited time offer. The offer ends in just 6 days. Check it out before they run out. With that out of the way, let's get on with the video. Tesla was up 1.17% for the day. My target for Tesla was around 187 to 188 is where I thought Tesla would peak. Then we could see a slight sell-off as the day went on, as we would see some profit taking and also lots of hedging. That's almost exactly what ended up happening. But the real question is, what's going to happen going forward? And in my opinion, I do believe technicals are going to matter to some degree, but they won't matter right now for predicting what Tesla is going to do, because we're just going to be reacting to the very big piece of news coming out for tomorrow, and that's CPI. Technicals will matter once the data comes out, and we could actually look at how Tesla moves depending on it, but we first have to see the data to actually get a real understanding of what's about to happen. Now, when it comes to CPI, I just want to note that most sectors have actually continued to increase month over month, especially for the last February data. Some have actually shown some signs of decrease, but overall inflation is still way too hot. Looking at the data right here, I just want to note to everyone, I know you see this and you probably think, oh, inflation's dropping so hard, we're making so much progress. To some degree, sure, you could say that, but for the most part, I'm still not necessarily too comfortable seeing this, because you have to remember that what CPI is doing is it's measuring the rate at which prices are changing. That's all CPI is. So this means that prices got 9% more expensive for the overall report uh, for the month of June of 2022, right? And now for the last report, which came out for the month of February, they went up by about 6%. So they're still going up. They're still going up into some very large extents. Things are still very expensive, and we're still very far from the Fed's target of 2% CPI. This tells us right now that, look, the Fed is going to either have to continue raising rates or even like pause very soon, whether it's during this meeting or the next meeting going into maybe June or July. And then they have to keep rates high for an extended period of time to bring inflation down. They have to do that. They don't really have a choice. And in essence, this is going to lead to lots of pain in the markets. Tesla and many companies are starting to show some signs of experiencing the pain. And I just want everyone to be very careful and cautious and very resilient during times like this. But the bottom line is, inflation is still very hot, and there's still a lot of work to be done by the Fed. And are we seeing disinflation? I mean, once again, guys, I don't want to make the call, because you have to remember that during the warmer months, around like May to June, we do have a tendency of seeing energy prices go up and also many other commodities and prices like that, which means that there could be another spike coming by the time we get to, like, I don't know, April, May to June. There is a possibility of that. So we have to still be very careful. The market is rallying, thinking that the Fed is going to pause. Things are just fine. We don't have to worry too much. And they are also kind of betting on there being a more soft landing. I personally do not see that happening. I do believe the odds favor uh, a more hard landing. We're getting lots of signs of it, and a more deep recession than what the markets are anticipating. But for the time being, once again, I am very reactive to what the charts are doing, and so far they're holding up nicely. There's no guarantee this continues, though, because it will depend on CPI and other factors. Now, as the report comes out tomorrow, it's coming out about an hour before the market opens. Make sure you're ready for this. Once again, before the market opens, the data comes out. Core is going to be coming out, and it's actually expected to be around 5.5%. However, some Fed officials have come out and they are projecting it to be a little bit hot, just core specifically, a little bit hotter than expected. Now, For inflation alone, and that's just CPI, that's expected to be around 5.3%. And by the way, core is just CPI without food and energy. If you're new to this, that's all it means because the Fed does not have as much control over food and energy prices, if not any control. That's why it's very important to look at those two factors. Now, what's important to look at is the fact that looking at retail gas prices month over month, we did see another increase by about, I think that's like 19 cents. That's a bigger increase compared to the previous, or it's not a bigger, it's very close to the previous increase we saw between January and February. And for the month of March, once again, gas prices went up. So that could actually signal a hotter reports than what people are expecting. No guarantees though, because there were months where this happened and we still got a decent report. The reason for that is because energy alone is not everything. Housing now makes up a bigger percentage of the calculation in terms of weight. So we'll have to just wait and see how this comes out. I also do not like to try to like guess or predict it perfectly in any way, shape, or form. And the reason for that is because it's a very manipulated number. People do call it the CPI for a reason. And I just don't know exactly what it's going to tell us tomorrow, but it will affect how the market moves. Now, when it comes to the data, I just want to note that if we see CPI at 5.7%, expect the market to crash. It's not going to be pretty. 5.5 to 5.6%, we should see another pullback in the markets. It would not be too significant or like too crazy, but it will actually cause a 1 to 2% drop. If we get anything between 5.3 and 5.4%, it could be okay for the markets. We should see a 1% move overall. And in my opinion, anything at 5.2% or less, very close to what the consensus was, we're likely going to see the market continue to hold up and maybe even rally more if we get a low CPI report. However, based off the data, the odds are favoring it being closer to this, if not a little higher, excuse me. I don't really know though. Once again, it is very hard to predict, but it is a possibility, and this is just what the odds are favoring. Now, core is going to be just as, if not more important, because a lot of analysts are now saying core might be a little bit hot. There are also analysts saying it's going to be very cool, so it's very mixed. But I just want to note that those who are saying it might be hot do have a lot of merits behind that, especially the Fed officials. Now, 6% core CPI is going to be horrible, horrendous. The market is going to crash if it's that hot. 5.8 to 5.7% would be pretty bad. The market will drop quite a bit if we get something like that. Then 5.6 to 5.5%, which is very close to what the forecasts slash consensus are going to be, could lead to a very okay reaction. We could go up a little bit, maybe even come down. It's very hard to predict what the market would do if we meet expectations. And then if it's anything around 5.4% or less, the market could actually rally off of that. The market could still hold up, and we could actually continue to, keep pushing, and the rally could continue from there. I just don't truly know, but I just want to note based off some very credible information from the Fed, the odds are favoring this being around 5.6% or very close to what the forecast is, if not a little bit higher, based off what we're seeing. I really don't know for sure though. I don't want to like put that in your head and cause you to just expect that. As a trader, it's very important to be open minded and prepared for anything. It could be high, it could be low. We'll just have to wait and see. So please remember to look at both core and CPI as a whole. Make sure you watch the headlines. They are going to be very dramatic. And once again, expect a very big move from the markets. Now, for Tesla, as of right now, this data does not have as much significance as of right now because, once again, CPI is what's bigger. The volume is still relatively low for Tesla. We're not getting as much buying pressure, but it still had a green day. It is showing some signs of trying to reverse. We just need more days to keep going, and we need to see it establish a higher low and continue to hold up nicely, and that's going to be a good sign for it. We just need a little bit more confirmation. But besides that, the short volume is still relatively low compared to before. That tells me so far those going long are gaining the edge over it, as Tesla got a nice bounce yesterday, and today it actually held up as well. Looking at the price pairs ratio, this was pretty flat as Tesla did outperform the QQQ and the NASDAQ, but it did actually performed very close to how it's expected to perform compared to SPY. That tells me so far Tesla's trying to stabilize around the area it's in. If you look at the price price ratio, it holds this level quite nicely and tries to bounce there. That tells me Tesla wants to hold up. It does not want to crash too hard from a technical standpoint. That's a pretty good sign. Now, Deutsche Bank is telling us buy Tesla. They do tend to do very well during earnings. Wednesdays tend to be statistically kind of red for Tesla. They're only green like 49% of the time. Once again, it doesn't matter too much. Depends on CPI, of course. And finally, the short interest, the overall short interest on a daily basis has been dropping for Tesla. There's been less shorting overall. That's a good sign approaching earnings. Maybe a lot of these like big investors and analysts do not want to short Tesla hard as of right now because they know it might pump approaching earnings. But then again, this could change depending on CPI. Now, one thing that's a little concerning would be the inventory levels for Tesla because different analysts are saying that Tesla is once again continuing to slash prices. They did do it again very recently by 2 to 6% over the last weekend that came out. I did make a video about this and mention this. That's also part of why Tesla sold off, I believe, yesterday in the morning. But that's not the bigger reason. I would say the Taiwan situation was very, very scary for many investors. That played just as big of a role, and the whole market actually sold off in the very beginning because of it. For now, the situation has actually cooled a bit. It's not as tense. And I do believe that the reports not being as tense, that has also helped the market improve. Now, going forward, there has not been any invasion, of course, right now. That's also a good piece of news. I really hope it stays that way because, once again, that's going to improve the sentiment for the markets, the semiconductor industry, the supply chains, and etc. And the sentiment is going to remain a lot better as long as that does not happen. But, anyways, when it comes to Tesla, these price cuts are now suggesting that there is most likely slowing demand, according to many analysts. And that is aligning with this right over here. Look at the inventory levels. I think that production could play somewhat of a role in this. They are improving production mechanisms, but the problem is demand is clearly slowing down across the economy. This is necessary to bring down aggregates demand for products and services, and also for private services and etc. to bring down inflation. This is what the Fed wants, and now it's affecting Tesla, which tells me that they may not get the strongest deliveries report for Q2 now, and earnings may not be that great either with all the price cuts for Q2. I'm going to warn you guys in advance about that. Once again, Tesla does surprise a lot, but it is something that's very, very important to be concerned about and something to know. But anyways, for now, right, Q1 was still pretty good for Tesla. They broke their all-time record for deliveries, even though it did not meet every expectation. It didn't like smash expectations. They still did well, so I'm still hopeful for earnings. We'll see how their margins look, but until then, we have about 8 days until Tesla's next report. But the real question is, what's going to happen to Tesla for tomorrow? Honestly, guys, I don't truly know. I don't know what CPI is going to bring. Nobody truly knows unless they're like insiders or there's some very important officials. But the large majority of investors don't truly know. And I believe that it's going to cause a big move in either direction. If we're bullish on Tesla, if it causes Tesla to rip to the moon and the whole market rallies, expect Tesla to fight and break above 188 and fight for 190. If it breaks 190, there's this gap around 192. If we break it, this thing is going to fly to 195 pretty fast, and Tesla has a lot of potential to do that. There's a possible trend reversal here, right? It looks very nice so far. We got a bullish MACD. However, the problem is I can't say anything with high certainty because this will depend on CPI. If we're bearish because of CPI, Tesla has this gap down here around this 184 area. And also, if it breaks below that, then we're going to be watching 182 to about 180 flat. And if 180 doesn't hold, then there's 176, very important support. Make sure you watch all of these levels very, very carefully. There's a gap below, I think around like 175 or lower. We have to watch it carefully. Once again, it could go either way. But I do want to note that because analysts or some very credible analysts from the Fed are projecting core to be a little hot, I'm going to be very, very cautious. I do believe the odds are a little bit more in favor of downside, but I don't know for sure, and I'm always prepared for anything just in case. But like I'm saying, I'm recording this before the data comes out. I think the odds are a little bit more in favor of a hotter core, a somewhat hot core, which could slow us down just a little bit. Hopefully, it's not too bad. I also want to note that there's going to be a lot of trickery in the morning when the market opens. And that's also going to be very tricky. So be careful. They could try to gap the market up, then we get just smacked down. Or what they could do is gap us down, then smack us up. They could also just try to trick you in many different ways. A big move up, then just a collapse, or even the opposite. It's just very tricky to trade sometimes on these CPI days. That's why you have to be super, super careful. But once again, like I said before, expect a very big move and just be prepared because the odds are a little bit more in favor of downside. Maybe there's like a 55% chance of downside, for a 45% chance of upside. Once again, it could go either way, but like I said, be prepared for anything. Odds are a little bit more in favor of downside. For SPY, I just want to note that if we're bullish, okay, if this is bullish, this thing is going to break above 412 and fly all the way up to about 414. A very important supply zone is all the way up here if it breaks 412. If we're bearish, SPY is going to retest this 408.75 area. If that fails, it's going to come all the way down to retest the 50 EMA. If that fails, there's 406. Super important support right over there. It has to hold around 406. If it fails, SPY is going to come all the way down to fill some of these gaps. The low 400s are going to come, followed by potentially 400 to be retested. Make sure we watch this very carefully. It could go either way. Be prepared for trickery and be prepared for anything. But like I said before, the odds are favoring downside just a little bit more. The dollar is trying to break out. The dollar actually closed kind of green. The dollar was trying to push up. It's actually above 102 right now. So far, the dollar is holding up nicely, and if it does try to, bounce off this, especially because we're getting a potential MACD crossover. I showed you guys the charts yesterday that the quote unquote smart money or the institutions are selling right now. The quote unquote dumb money. I'm just using the terms because I'm not saying that we're dumb or anything like that. It's just a term used to refer to retail. I just need to use that term just to show you what the chart was telling us. Retail basically is buying into the rally. They're very bullish, whereas the institutions that have a lot more resources and experience in the markets are actually selling right now, right? So that makes me a little bit concerned, especially because the dollar looks like it might break out soon. It hasn't fully broken out, but it looks like it might be getting ready to as we're about to get this crossover. And it did actually bounce off 101.5 around that area. If it breaks out, that's going to be very bearish for the stock market. Please be ready for this just in case. And it is showing some signs of strength right now. I'm still very cautious. I'm just going to talk about a couple more before I end the video, maybe just the QQQ, the VIX, and Apple. I do need to end this video kind of early because I do have a lot going on today. Daily charts, I just want to note that the QQQ has some weakness. We're about to see a crossover on the MACD, but it will depend on the data. If CPI causes the market to rip, the QQQ is going to retest 318, then 320. If it breaks that, 324.5 could come because technicals are not everything right now. If the overall CPI report and core are not good, this thing could come all the way down to retest 310. If that fails, there's a gap down here around 306 that could get filled. I think it's actually at 308, and then we have 306 after that. But very close to those levels, there's going to be more downside. What do I think is going to happen? I really don't know, guys. I don't know. I'm not really predicting anything, but I do want to note that the odds are a little bit more in favor of downside because core is most likely going to be a little bit hot. It's a little bit more likely. Once again, a 55% chance of downside, 45% chance in my eyes. But once again, be prepared for anything. Uh, Anyways, the VIX is kind of green. It looks like it was trying to stabilize. If CPI is hot, the VIX might get a breakout as the rally ends up dying in the markets, as the market starts to downtrend. Be ready for that. If the VIX does break out, that's not going to be good for the markets, right? The markets are going to dictate the VIX, of course, but I just want to warn everyone about that. That's another very important indicator we could use. And finally, we got some pretty flat closes, some red closes on the tech side. Tech actually slowed down a bit. Apple is going to be very important. On the hourly chart, I just want to note that if Apple's bearish, there's a gap down in the mid 150s. It's going to likely come all the way down there, and that's going to drag down SPY into QQQ. It's also going to play a role in dragging Tesla down. But if this thing is bullish, right? If this thing turns bullish, we have this gap up here around 164. It could go either way. We're kind of in the middle right now, stuck between two big gaps. I don't know which way we're going to go. The odds do favor downside based off the structure. It's a little bit more likely, but once again, I'm prepared for anything just in case. Right? We could rip to the moon. It could still continue. Still very possible. I'm very prepared for that. I'm properly hedged right now. I hope everyone is. I'm mainly sitting on cash right now, by the way, not financial advice, but I just want to put it out there. Be prepared for anything. If we're bullish, we could fill the gap above. It gets about the mid 160s. If we're bearish, 157, then 155 could come on Apple. If we fail and break below 160 off a hot CPI, I don't know which one's going to be. I'm prepared for anything nonetheless. The 10-year Treasury yield actually held up. That's once again a somewhat bearish signal. It's actually continuing to go. I don't know if it's going to end up tanking to fill this gap. If that happens because of CPI, that's going to be bullish for the stock market. If this thing keeps going, it breaks above 34.68. If it keeps going, it's going to be bearish for us. So far, it's a little bit more in favor of the bears, but this could change depending on the data. I don't know exactly what CPI is going to bring. I don't know exactly what it's going to look like. But I'm prepared for anything and I'm properly hedged during a time like this. I'm prepared with proper risk management. Anyways, thank you all for listening. Please have an absolutely incredible rest of the day and get ready for Tesla. Expect a very, very interesting move tomorrow. We're going to react to the data coming out 1 hour before the market opens. Make sure you're ready and do what you have to do. Thank you. The last thing I wanted to say, guys, is down below, right above the comments section, you guys should be seeing my new shop that came out. I have some custom merch for you guys if you're interested in supporting the channel. If you also want to buy shirts that just show that you're a trader or to bring in out your pride or etc., to the moon shirts are pretty cool too. If you're interested in any of this, it's down below in the description. It's also down below above the comment section. Please, please, please do what you want to do. And just remember, Tesla's future is still very bright. Tesla to the moon, as the long term is still very bright. And peace out.